welcome to Macros with Mythili, the ET Now show that takes a hard look at all the major macroeconomic issues and developments in India and overseas. Well, banks have been in the news for the past many weeks, but while the issue of non-performing assets (NPAs) and recapitalization of public sector banks has received more than its due share of attention, the related issue of bank consolidation has been largely ignored. What is it about bank consolidation, however, that makes successive expert committees and governments return to the idea again and again? Does consolidation really address any of the issues facing banks today? If not, then why does the idea keep resurfacing? Joining me in the discussion are two experts who know the banking industry inside out. Pratip Chaudhuri, former chairman, State Bank of India, and G. Padmanabhan, former executive director, Reserve Bank of India, and presently non-executive chairman, Bank of India. Welcome to the show, both of you. Well, let me start by asking both of you in turn something that's been a bit of a puzzle to me, and I'm sure it is equally so for our viewers. Given the challenges facing the banking industry in India today, particularly public sector banks, why is the government so fixated on consolidation? And mind you, it's not just this government, but successive committees, starting with the Narendra committee post-liberalization, have argued the case for consolidation. But can creating larger banks on a global scale be an end in itself? The merger of Japanese banks in the 80s and 90s was driven by this motivation and it had disastrous results. Japan is still in the process of clearing the mess. And even if the top 5 Indian banks, excluding the State Bank of India, are merged, the resulting bank will be largely a pygmy by global standards. So, Pratip, can I request you to go first? What explains this naive faith in consolidation as an answer to the ills of public sector banks?
No, I think it is the why it is coming up that there is a need to eliminate some of the duplication. For example, coming from SBI, we still have 5 associate banks which have not been merged. Now, you know, we put up a branch of State Bank of Travancore in Patna, and this person says, why on earth should I come to State Bank of Travancore, or for that matter State Bank of Hyderabad? I would much rather go to State Bank of India. Similarly, you know, when some north-based banks are in deep Tamil Nadu or Kerala, people wonder that what kind of franchise would they have there. Now, these are the products of the legacy issues. For example, you know, Ludhiana. Now, Ludhiana is a big manufacturing center, and in order to remit money, if you are a cycle dealer and if you have to remit money to the cycle manufacturers in Ludhiana, it was important that your bank has a branch. So, everybody went and did a branch in Ludhiana. So, that is how, because you have to send a draft. Now, today that situation does not exist, and reciprocally, because it became a competition. Oh, this bank with 1000 branches, I am too small, so I must get to 1000, another 2000. So much of the expansion has been, to my mind, a bit of mindless. For example, you know, in one district of Tamil Nadu, there was a competition and direction to the banks for opening branches. Now, at times when you go to these branches, they are absolutely deserted, and you wonder what is an IDBI bank or a Punjab National Bank doing in deep Tamil Nadu. Similarly, if you go to, you know, commercial places like Nehru Place or Bagbe Reclamation in Mumbai, you will find side by side X Bank, Y Bank, and even among our associates, State Bank, Bikaner and Jaipur, Travancore, having commercial branches and overseas branches, and with a huge overlap of customers. So, I think some of that can be rationalized by reducing the number of banks, and since the deposit and the advances are not going to shrink, so I do not think anybody would be deprived of credit or an opportunity to open deposit account, but at the same time eliminate some of the waste. I will limit my initial comments here.
Okay, Padmanabhan, Pratip said that, you know, you can do a lot of rationalization, remove duplication, etc. But at the same time, we are talking for the need for having more banks. We're issuing new licenses, small banks, payments banks, all kinds of new banks we're issuing. So, is that a logic that can we, because we want to remove duplication, is that the reason for wanting consolidation, or is it that the government and the RBI are driven by this idea that you need to have a large Indian bank? It's somehow macho. What, to your mind, explains this obsession with consolidation?
See, Mythili, let's look at it like this. I don't think the consolidation is an end in itself. It has to achieve certain means, and what we need to achieve, we need to be very clear about. Now, if we are going to say that we are going to simply increase the size of these banks, given the present balance sheet size, I think even if you combine top many banks, they are going to be in the international context much below the maybe top 20, top 25. So it is not really the increase in size that we should be looking at to achieve. So what is it that we want? Do we want to avoid duplication? Now for avoiding duplication, is this the only way forward? These are the issues I think that we need to clearly strategize before we take a final call, because I think this is something that which we have tried several times in the past, and we should not end up in the same position as we have been before. So the strategizing, this is one of the important aspects which I think we need to do before we take certain steps or towards this consolidation.
Pratip, Padmanabhan is a little bit more circumspect. He says one needs to kind of consider whether consolidation per se is an end in itself. You were slightly more charitable, said that yes, there is a need to remove duplication. But even assuming that consolidation has some virtues, and it might have made sense at a time when large universal banks were the fashion, today when the global financial crisis has shown us that large banks are perhaps more of a disadvantage than an advantage, does this obsession with size seem out of place? Is there something like a right time? That is my question. More specifically, at a time like today when banks are already struggling with a host of issues, should we saddle them with one more headache and ask them to consolidate? Because in the short term, it does come with some operational headaches every time you take over a bank which perhaps is not happy to be taken over.
No, I quite take your point. It is not to achieve a certain scale, because nobody cares that how big are our banks. It is, and our banks can only be as big as the economy is. If the size of Indian economy is 1/3 of China, then of course, our banks can also not be expected to be 1/3 of the Chinese banks. But what I find is, for example, what is the State Bank of Hyderabad, coming in the SBI context, doing in something like Guwahati? So that is why, and I'll give you an example. Say there is a neighborhood called Kandivali, which is largely a Gujarati neighborhood in Mumbai. And State Bank of Saurashtra, of which I happen to be the MD, had a branch. We did try to do a lot of work to get in more accounts, and we gave a lot of incentives. With great difficulty, we could have 4,000 accounts. Now, within that bank becoming a part of SBI, within 1 year of that branch had 10,000 accounts. So I went to them and I said, why did you not respond to my exhortations and grow the business? How have you grown it now? He said, no. Earlier people would come, look at the board, say State Bank of Saurashtra, maybe there is a spelling mistake, it must be State Bank of Maharashtra. And when it became State Bank of India, it needed no introduction. People just came in and started opening the account. That's how the business grew. Now, in this context, if we had both Saurashtra and also SBI, I think it would have been a waste, because all that State Bank of Saurashtra could have delivered, State Bank of India also could have. And now being a part of a larger bank also helps, because I went to the State Bank of Saurashtra customers, and many of them had exports, or they were trying to take over small businesses in US and all that. Now that is possible when you are a part of. So I explained to them. They were very apprehensive becoming a part of SBI. They said that SBI is too big and we would get lost. So when I showed it to them that I can talk to my LA office and try to help you with some escort service if you are looking for some businesses there, then they felt that no, it's a great advantage going.
Padmanabhan, Pratip just talked about the advantages when State Bank of Saurashtra was merged into State Bank of India. And while that is true, there are some advantages that come from State Bank of India's size. My question was more, is this the right time, even assuming consolidation has some benefits, and one can debate the cost-benefit trade-off? Question is this the right time when banks are, as it is, battling on so many fronts? Do you want one more headache thrust on them by trying to get consolidation also thrust down their throats?
Mythili, while I completely agree with what Mr. Chaudhuri has been saying, I would like to think that the issues that State Bank of India, or the compulsions that State Bank of India faces, I think when we consider in a larger perspective of two completely different desperate banks trying to get together, we need to take on board a lot more issues. I think one, the issue of culture, while within State Bank of India they have at least one IT system, there are so many preconditions which are already satisfying, still I think it was not a very easy thing that they went through when they were trying to merge their subsidiaries. So I would think that we need to probably strategize much more, think of much more issues at a granular level before we start this exercise of actually the merger and amalgamation. Having said that, you asked the second important question, is it the right time to start doing this? I think the kind of issues that public sector banks are facing now, probably at the board level, I would personally think that I need to resolve those immediate issues first, while this would be more of I wouldn't say completely secondary, but once I have to clean up my balance sheet, I would like to look at these issues on a clean balance sheets rather than trying to fight too many battles at the same point of time.
Oh, absolutely. I think it is a fact that banks are now battling on many fronts, and right now might not be the right time to ask them to also consolidate. But I'm afraid on that note, it's time for us to slip into a very short break, but please do stay with us. We'll be back very soon. Welcome back. You're watching Macros with Mythili, and we're discussing the government's faith in consolidation as an idea to sort out the problems of public sector banks. But Padmanabhan, before the break, you talked about strategizing and the fact that this might not be the right time to consolidate. And the fact is that for all the faith in consolidation, the fact is that the bank that has actually taken over the troubled bank has usually paid a price, whether it was Global Trust Bank's merger with Oriental Bank of Commerce in 2004, or New Bank of India's merger with Punjab National Bank earlier. In the former case, OBC was doing quite well at that time, but it saw its capital adequacy ratio fall, the gross non-performing assets shoot up as a consequence. So clearly, it took OBC quite some years after the merger to restore its financial health. Likewise, in the case of New Bank of India and Punjab National Bank. So, is that how consolidation should be driven? What are the strategies that you would like first to kind of come up and then drive consolidation?
Okay, now if I am asked to strategize my taking over another bank, I would think that the first step, simple arithmetic, 1 plus 1 has to be something more than 2. If 1 plus 1 is just 2, I think we are just adding up the balance sheet. That's not the kind of consolidation that I would be looking at. So what does that translate into? Let's take a simple example in my view which needs to be addressed before we go forward, is that if today the issue of NPAs being faced by the public sector banks particularly largely has come out of an account of infrastructure financing. Now, do we have an alternate for this, or are we trying to concentrate this infrastructure financing in 5 or 6 or 7, whatever be this number, these large banks? I would think that these things will have to be looked at together. Now, you cannot have a large bank which simply takes over the infrastructure loans of the other banks, because the same problems, the same vulnerabilities just get consolidated. So what we need to do is an alternate for infrastructure financing. Should it be purely done by banks? Probably India is an outlier as far as that is concerned. And having done that, the second aspect is that if we are going to merely have a large entity in terms of numbers with the same kind of weaknesses in terms of credit appraisal, the skill sets, the HR issues, the governance issues, then probably again we would have simply added up the numbers without really achieving the benefits of the consolidation. These aspects are pretty important in my view, which needs to be taken on board by the expert committee before we clearly lay out the roadmap.
Pratip, I think Padmanabhan touched upon a very important thing, that unless we address the systemic underlying issues, merely consolidation per se will not sort out the problem. And government has said that consolidation should be led to bank boards. But we all know what that means in a scenario where government virtually calls all the shots. Throughout today, the post of chairman and MD has been split in nationalized banks, and we also have a bank board bureau. But there's no denying the overarching influence of the government over public sector banks. So how much of a say will the bank boards really have? And will they be able to do anything unless you address these underlying issues of infrastructure finance, of board-driven banks, etc.? Pratip?
See, always mergers or acquisitions are driven by owners. the board, respective boards, because if you merge two companies, so one set of people will lose their jobs. You cannot have two chairmen, two MDs. So it would never be triggered internally. It has to come from the owners. But I would agree with Mr. Padmanabhan that there should be additional value than besides a line to line merger. Coming to the timing issue, I think if we wait for a perfect timing, it will never be there. But so depends on, you can choose a timing which are less troubled or which are at the peak of the trouble. That is the call we have to take. And I would fully agree with Mr. Padmanabhan that there are huge cultural issues. And therefore, when we do the merger, my suggestion would be we take the banks from the same geography. For example, I think if you integrate Indian Bank and Indian Overseas Bank, the challenges would be much less. Similarly, talking of Bank of India, though I may not have full details, a Bank of India taking over or merging with Central Bank and Union Bank, that I think, of course, subject to other challenges of systems and all that, it would be more homogeneous, less heterogeneous, let me put it that way. Similarly, the Karnataka banks can be thought of being brought into either one or two banks, Eastern India Bank, and in North my suggestion would be PNB bringing under its umbrella Punjab and Sindh and Oriental Bank of Commerce. And I would give an example, for example, Dena Bank. Now, Dena Bank is seen to be, Gujarat people have a lot of ownership about Dena Bank. Now, Dena Bank, if it is taken away by some bank which is not very rooted in Gujarat, there could be a sense of loss. But if Dena Bank goes and merges with Bank of Baroda, I think the sense of loss would be minimized, and even the cultures and the people, there would not be as much heterogeneity as it would be if Dena Bank is merged with another bank from a totally different geography.
Pratip, to your mind, there is some logic of consolidation in the case public sector bank space. But when one looks at the regulation now, for instance, then again the case for consolidation seems quite weak, particularly because of the logic of the too big to fail argument. The argument is that regulators can afford to let a small bank go under when it's in trouble, but that's not an option when it's a large enough bank is involved. The consequences are far too dangerous. See what happened when Lehman was allowed to go under. Hence, the term systemically important, which is an argument against large banks. In fact, a think tank in the US has recently recommended splitting up the beleaguered RBS into highly interconnected small units precisely because it enables better regulation. So, given that, theory, economics and research has advanced much further, is this one more reason why we should not go in for consolidation? Are we in India always behind the curve? As a regulator, as a former regulator, is this one more argument against consolidation, Padmanabhan?
No, I think now I should think more in terms of the present chairman rather than the formal regulator. But anyway, I think you made some important points. The West is probably reversing the earlier model and going in for smaller units. Is it the time for India to do something differently? I would perhaps say that we need to find Indian solution. I don't think our solutions can be entirely based on what the West has been doing. But you see, the issue that Mr. Chaudhuri pointed out, that one way that we could take away this cultural issues could be ensuring that the banks in the same region tries to merge together. I see a fundamental problem there that needs to be taken on board. I don't say that that exists, but that could be a potential problem in the sense that if these banks in the similar regions have similar weaknesses in their balance sheets, I don't think we are going to achieve much by simply bringing them together. So yes, cultural issues would be resolved to a large extent, but there could be the issues of the weaknesses being just consolidated. So what we need to look at in today's context is there avoidable duplication that we can address through maybe one step before we start actually the process of consolidation. Let me try to amplify what I am trying to say. I am trying to say that today there is just no limitation on number of banks that can be a part of a consortium. So maybe it's one bank or two banks which is involved in the entire credit appraisal, although the rules of the game say that many banks will have to, each bank will have to do its own appraisal. What really happens is nothing beyond what the lead bank has done. So what each of these bank is adding to the consortium, is each bank able to have the same kind of say in the consortium, and the points that Mr. Chaudhuri flagged in the beginning, similar same public sector banks, 8 banks in a particular location doing the same thing. A data warehouse, today each bank is talking about a data warehouse of its own. Is it something that is really necessary? So we should first start addressing, in my view, this be a goal. Yes, it is not that we can remain fragmented forever, but we need to take on board where there are obvious duplications, whether that could be done away or that could be sorted out as the immediate important step that we need to do. To my mind, that would be very important.
Pratip, Padmanabhan talked about obvious duplication, but apart from that, the fact is that in the banking sphere, there's an overarching goal of financial stability, macroprudential stability, etc., and that becomes very often an issue driving the consolidation rather than the benefits, perceived benefits for shareholders as well as consumers. So how important should that overarching facility of macroeconomic stability, financial stability be? Or is that something that the taxpayer should bear and you should not penalize shareholders and ask them to carry that cross? Pratip?
No, I think this thought is very far-fetched. The last time a bank failed, Mr. Padmanabhan may correct me, was Palai Bank in 1968. So after that, there has never been a bank failure, but you are very right, Mythili. No, yes. So you said that, private banks were merged into public sector bank. But also look at every time this taxpayers issue comes, bank deposit, the deposit insurance corporation that has been created, taking away 10 basis points from every deposit, is possibly today one of the highest taxpayers in the country. Okay. And their reserves are something like running into 30 or 40,000 crores. But I agree that's a buffer. So it is not that, that taxpayers are taking the hit and there are enough buffers. And in India, nobody visualizes that the bank would fail and the depositor would take a loss. This is not happening in EU. And the last example I would give, what is Unit Trust of India? Unit Trust of India, when it, I would say, went bust, in the sense that they could not honor the commitments they had made to their depositors, 4 public sector entities, 3 banks and 1 insurance company were brought in to bail it out. So it is that even if another bank does not go bust, but another part of the financial system runs into difficulty, it is always expected that the public sector banks would be the pallbearers and would be taking the process forward.
But you use the word pallbearers, Pratip, but I'm afraid we're completely out of time, so I'll have to call an end to this discussion. So it's been really interesting talking with both of you. Thank you so much, both Pratip as well as Padmanabhan, for sharing your views. Clearly, as far as consolidation is concerned, they must create value for shareholders and consumers. But in the case of banks, we have certain different criteria. We'll have to take into account the goal of financial stability when one talks of bank mergers. Ultimately, consolidation must also make commercial sense. But if the objective is merely to compete with international banks, it is foolish grandstanding for which you could end up paying a hefty price. Apart, of course, from the fact that it's not going to happen, not for a long time, Indian banks will remain small by international comparison, consolidated or not. Thank you also for watching. Remember, we'll be back next week with yet another edition of Macros with Mythili. Till then, it's thank you and goodbye from all of us at ET Now.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.